Aviva, BP and HSBC are reaching their yearly highs, and it just shows how strong some of these companies, some of these big companies in the UK really are right now. Especially when we've got sort of like an incoming recession and talk like that, and of the economy slowing down, we can really see, you know, which companies are kind of like at the top, the cream at the top of the crop, you know. So firstly, I just want to apologise for not making a video in a wee while. I have been on holiday, and so I pre-recorded a lot of videos and then released them over a few weeks, but now I'm back, so hopefully should be doing quite a lot more videos. And also, if you hear any loud noises and bright flashes, it's because there's a thunderstorm going on right there. So I thought, why not? It just adds a bit of more dramatism, you know, to the video. So hopefully you enjoy that one. But I wanted to talk a little bit about Aviva, BP and HSBC because they're all really interesting. And let's start with HSBC. So it's been kind of going up and down as all shares do, but it's reaching its yearly high. And that's for a couple of reasons. So if we have a look at the graph real quick, we can see that over the year to date, I'll click the 1 year, and you can see that we're reaching that kind of high point which it reached before. It kind of hit 561, 562, something like that. And now we're back up at kind of £5.50 per share. And there's a couple of reasons for that. So HSBC has been kind of on a bumpy ride. You know, Hong Kong has always been a bit of a contentious issue over the past couple of years. Investors were a little bit worried about that. And coronavirus hit, and there was a kind of Chinese slowdown, and there's still a Chinese slowdown when it comes to things like COVID. So there's a little bit of worry about that. But to counteract that, what HSBC have said is they're going to be releasing quarterly dividends again, and they have been increasing their profit back up to almost previous levels. I'm still a bit shy, but what it means is that investors have got that confidence back. And there is a large shareholder, Ping An, who wants to break up HSBC into its Hong Kong and UK counterparts, or rest of the world counterparts, if you want to call it that. And what that could create shareholder value, extra shareholder value, which isn't represented in this price just now. Now, the CEO of HSBC says that it wouldn't actually create much extra value, but who knows, right? So lots of investors are holding on to see what will happen and whether, you know, maybe some more value can be unlocked. But one of the things I personally am looking forward to is that quarterly dividend being reinstated. That was a massive, massive thunderclap. If my house gets struck, you'll probably hear it, but that was huge. Anyway, back to HSBC. So the quarterly dividends are going to be great. I held HSBC back in 2015 and got a few quarterly dividends. I was just a novice back then, and I still am, to be fair, but I bought into HSBC in 2020, and since then, of course, it went down through COVID, and it's starting to recover now, and I've not had a quarterly dividend yet. In fact, I've not issued many dividends at all, but if you're a long-term holder and you're kind of waiting for that to happen, then now could be the time. So this is probably the time where more people are potentially looking to get in and reap those rewards of those quarterly dividends, as long as the company does well. So that's why HSBC is doing quite well right now. If we have a little look at the next contender, BP. So BP, of course, is doing quite well from the high oil price. They realised an average of over $100 a barrel in the last quarter, giving them one of the biggest profits they've ever made, over $7 billion worth, which post-tax I think was about £5 billion worth of profit in one quarter. And what that means is investors are getting a return of about 23.5% if BP can keep up that kind of profit level going forward, which is quite tasty indeed. So BP are kind of reaching their highs again. They hit about £4.51 round about. You can see back in June they had a little bit of a fall, and then and are kind of reaching those highs again. So it'll be interesting to kind of see what happens. But of course, off the back of the high oil price, and I mean, even though it's round about $90 a barrel, it's come down from about 130. The oil price is still extremely high. So BP says anything above $60 a barrel and it's doing pretty well. So we're still 50% above that. So that's obviously driving the share price up. And they have also they're also doing a share buyback of I think it's $3.5 billion, which is about £3 billion. So that's an absolutely massive amount, and you can see they announced that share buyback around about kind of June, July, and you can see since then the share price has only appreciated. So that's obviously helping to boost that share price and reducing the amount of shares in the market. And then if we look at last but not least, Aviva. So Aviva's a really, really interesting one. Aviva just tends not to do much. Most shares shares are meant to follow the efficient market hypothesis, where they move to a certain price because all the knowledge is known, and it should never go up or down because everybody knows what the price should be, what the value of the company should be. But of course, inevitably, that's not the case. Everybody thinks and values a company slightly differently. But Aviva tends to be on a very even plane most of the time. It doesn't tend to go up or down very much. But you'll see in the last month, it has surged. And that was only a few days ago. Aviva jumped by about 20% because it issued its results. And to be honest, I was looking into the results, and I read through the results before the market opened, before anything happened, and I couldn't really find anything that, I didn't even know what was going to happen. I thought the share price could go down, it could go up a little bit. I definitely did not think it would go up 20%. So the headlines were that Aviva made an operational profit, quite a good one, like £1 billion profit in the first half, which is pretty good considering the market cap was round about 11 billion in British pounds. So that was about 10% in a half year, and but then they said they made a loss through to economic conditions, exceptional economic conditions or something like that. And they said due to interest rate rises and I can't remember what the other thing was, but it basically sounded to me like something that could happen again in the next half. So I didn't really think that was that good. But then the one thing that they did say was there's a 10.5p dividend, which is going ex-div on the 19th of August, which obviously is quite nice, a bit of return to shareholders. And then Aviva also said that they will issue a share buyback, or look to do a share buyback with their full year results. So that's obviously one of the things that has really boosted the share price, because if Aviva have already performed quite a massive share buyback, so if we go back a year, what happened was Aviva, essentially it was a big dividend really, a 24% dividend, equivalent to about just over £1 a share. That obviously brought the share price back down. And Aviva bought those shares back. It was kind of like a share buyback, but a dividend, kind of in between those two things. And so Aviva are returning so much capital to shareholders, and if they're doing a share buyback on top of that and reducing the amount of shares available even more, then that's obviously what investors are liking at the moment. So you've got that on the horizon, and even if Aviva are sort of posting a quiet loss, because it wasn't really announced very much, I mean, I really had to dig into the financial statements, and even now I still don't really know after having looked through the financial statements. I'll be doing future videos where I really take you through kind of what I'm looking for and what I'm looking at, and maybe just showing you how confusing it really is to read these financial statements. But Aviva, I couldn't really work out at all. So it's an interesting one. I don't really know why it's risen so much, apart from this potential share buyback in 6 months' time. But it's quite a big rise to happen for 6 months' time. But because of the share buyback that had happened in the past, this big 24% dividend, it means Aviva is actually trading at one of its kind of year highs. It's probably up around about this kind of 580 mark, 570 mark. So don't be fooled by this graph. It is actually at one of its yearly highs, and let's be very interesting to see if it can continue that. So that's the 3 companies I wanted to share with you guys. Really, really interesting to see that, after everything that's happened and all this inflation, all this recessionary talk, you can see 3 companies that are at their all-time highs. Not all-time highs, but year highs when all of this is going on. So while there's talk about a recession, and while there's all this kind of doom and gloom, and there's still the war with Ukraine going on, the Russian war with Ukraine going on, actually there's some really solid companies that are performing very, very, very well in this mix. So hopefully that's of interest to you. So I hope you enjoyed, guys. I'm going to get back to the thunderstorm, try and video some of this lightning in slow-mo, try and make it look really cool, and hope you had a great weekend, and I will catch you on the next video.